Yeah, we do seem to finally be seeing a rising long-term interest rate environment, and at the same time, with actions by the Fed, short-term rates seem to be going up also. Obviously, this has been predicted numerous times over the last several years, but finally, we seem to actually be seeing the impacts on fixed income markets. The great asset that a bank loan product has in this environment is that it is floating rate, by its very name, floating rate. What this means is that the coupons paid by the loans can go up as short-term interest rates go up. And at the same time, whereas a fixed income leveraged closed-end fund could be impacted by a rise in the cost of borrowing as short-term rates go up, thus impacting their leverage, with bank loan funds, there seems to be an offsetting relationship whereby they will earn more as the leverage costs more, so you should see less impact to the dividends being paid out in that environment. Yeah, I think in terms of the impact on municipal bonds that the tax law changes have had, most of that we've seen already. Obviously, the law has gone through, the changes have been made. I think our view is that regardless of the fact that some tax rates are coming down on individual taxpayers, the desire for tax-exempt income is not going to go away. It's potentially tax-exempt yields have come down a little because of the drop in certainly at the higher end of those rates, but that doesn't mean that they become any less attractive. Investors are going to continue to want, continue to want tax-exempt income, and I think we're seeing that. In terms of individual states, obviously, one has to look at each state at a time when looking, but I think that potentially those high tax states, if things continue as they are in that way, we could see individuals looking to look at where they live based on what tax rates they're having to pay in those areas. So there could potentially be a flight of people into lower tax charging states. Yeah, and I think when one talks about geopolitical risks, just by their very nature, they are unpredictable. So I think to say that managers are paying more or less attention to the possibility of geopolitical risk at any one time is probably unlikely. I think managers tend to look at risk broadly all the time, all sorts of risk, whether it's financial risk or country risk or whatever it is, geopolitical risk, and manage accordingly. And I don't really feel like, certainly at Eaton Vance, I don't feel like they'd look at it differently in a U.S. fund versus a global fund. It's something they think about all the time when they're positioning portfolios. But again, by their nature, they are unpredictable. So we tend to try and manage with risk in mind. And obviously, no one wants an event like these to happen, but can manage through them when they do.